So Bitcoin has managed to grind out a slightly green day today, but I found some on-chain metrics which finally reveal why this relief rally was so short-lived and why we could just be in the start of a longer crypto winter. Yes, guys, I'm going to share with you a bunch of on-chain metrics which show that maybe we've not quite reversed yet and we need to spend some more time at these levels. I know that's not great, but we're going to look at these metrics, try to see if there's any green shoots of recovery and what are some of those lead indicators which we need to be looking out for, which could signal that finally we're ready for a real reversal, not just a relief rally, but a real reversal. So don't forget to smash the like button. Don't forget to subscribe. As always, check out the links in the description if you want to buy any crypto. I'll also leave the link in the description for my free technical analysis course. I was going to sell you this course, and the reason I was going to sell the course is I always know that people do not place value on free things, but I've gone ahead, I've made this available for free because I'm going to trust you guys as a community to not let this pass. If this course was listed for $1,000, you guys would buy it and you'd watch it every minute through Systemized. Now, because I've made it for free, how many of you are actually going to click through, create an account, make sure you watch it through the, every single minute, take notes and learn from it? You guys have to take value from it. Otherwise, it's just another free course out there which you're not taking advantage of. Let's get straight into the Bitcoin chart. And you can see I've done the full technical analysis on Bitcoin earlier today, but we are in this bearish continuation pattern, more likely or not, looking to break to the downside. I did say in the video this morning, we could get a long move here from the bottom of the wedge up towards the top. We are indeed getting that, and I said you could potentially trade this up towards the top of the channel around the 21,800 mark anywhere here before the short sellers start trying to send it back down to the bottom of this wedge. As you can see on the 5-minute chart, just zooming in, we're getting a smaller consolidation within the bigger consolidation, but this is a bullish one, right? We bounce from the bottom, we consolidate, and now the question is, can we break to the upside here and go to the top of the wedge? That is what we're looking for here on the short term. But let's try to understand what is going on here in the space from when we zoom out, right? We had this brief relief rally taking us from 17,600 up to highs of about 25,000, right? We crossed the 25,000 mark, and now that seemed to cool off, right? We're back at 21,500. What is going on, and should this have been the relief rally? Because I remember when this was happening, I was very clear in calling this a relief rally. I made it very clear that we're expecting a small little release of the pressure, but the bears continue to be in control. I'm going to show you why. We were constantly monitoring the on-chain metrics every single week with you guys, and we're going to do the same today to see what is going on. So the first thing I want to share with you, and again, guys, you're going to have to bear with me because I want to explain this stuff in as simple as terms as possible. So do hold fire as I walk through this. So the first thing we need to notice is that we have now fallen below our realized price, okay? So our realized price, well, sorry, we're just about above it now. So we're about above the 21,300 mark, which is our realized price. But what I want to show you, which is more important, is if you take a look at the previous bear market of 2018, 2019, we traded below our realized price. If you follow my cursor here, this orange line is your realized price, which is the aggregated cost basis of all the people who hold Bitcoin. We were below that for about 140 days. And one of the things I was wary of when we were seeing this relief rally, and I brought this up in numerous videos, is we haven't quite spent enough time below it. And this time, we spent 36 days below it before we had this attempted relief rally. So the argument now is, are we going to dip back below it to catch up and spend some more time below our realized price? And why is this important? Well, it's when you're below the realized price that people can really start accumulating. Remember those big whales and the institutions, and even you and I, we want these opportunities to accumulate. So until we're ready and everybody's bags are locked and loaded and they're not doing any more distributing or selling, then you know you've got your holder base, and then you're ready for your next big move to the upside. So that was the one thing. The other thing was we didn't get a clean test of two other metrics called the balance price and the delta price. These are other bottom indicators, right? So because if you look at the previous bear market, you saw that we did spend some time on the balance price, which at the time was about 3.6K, and we even wicked down to the delta price for that one wick down. So I remember making a video a few weeks ago now where I said, hang on, we could get that wick down here to our current delta price. And our current delta price, if I just bring that into screen there, our current delta price is sitting at 13,700, sorry, at this key level. So the question arises, are we going to come down? Are we going to test our balance price again and spend some time there like we did last time, right? right? This time we barely touched it. See where my cursor is here? We barely touched the blue line. Are we going to come down to those levels? 17,200 and test it. Are we going to wick down to that delta price, which it did in the previous bear market, and touch it? These are not guaranteed. These are all pricing models to give us an idea of what's happened historically, and they work until they don't work. But we do have to use these to give us a few clues of how saturated is this, and are we ready for the next big move to the upside? Now, some people will argue, okay, what about here? We barely touched our blue line here, and yet we went on our big move up to 69,000. Well, there's one fundamental difference between this move here and the move we're currently in. This was not a full bear cycle. This was COVID. This was the pandemic. This was followed by unprecedented printing with the Fed on your team. Right now, the Fed is not on your side, right? They are not being accommodative right now. They're doing the opposite. They're tightening the economy. They're restricting the flow of money. They're increasing interest rates. And that is not comparable at all to this period where suddenly there was government intervention causing this big flow of money to come into crypto. That's one of the things we have to keep an eye out, is we've not gotten close to our balance price at 17,200, and we've not got anywhere close to our delta price, which would be that one final capitulation, that one big flush out to get rid of those weak hands. So that's one thing that's on my mind, is looking at these price points. Then what we want to do is we want to start looking at the trend of accumulation. So again, if you're watching my on-chain analysis from previously, you will notice that we were looking at the different cohorts that were accumulating. And what we noticed was a few weeks and months ago, we were noticing that in phase A, the accumulation, in other words, the buyers were the shrimps, i.e. people with less than 1 Bitcoin, and also the whales, people with more than 10K Bitcoin. So the purple means they're accumulating. More red it is, means they're distributing or selling. So we saw throughout this period in July, as the Bitcoin price fell below 20,000, went down towards 17,600 after the whole Luna drama and the rest of it, and Tesla selling and various other things, we saw that the whales were buying, and we saw that the shrimps were buying. So retail investors included were feeling really bullish, and they were buying that dip very, very strong. Now, what's happened in phase B? Well, we've noticed a significant difference. We've noticed that the retail investors are still buying, right? That's this bit where my cursor is. They're still buying, but not as strong. The scores come a little bit to light blue range. We've now noticed big distributions, dark red patterns in this range, which means all your holders between the shrimps and the whales, so people who hold between 10 to 10,000 Bitcoin, they are selling. They took this relief rally as exactly that, a relief rally. Take the opportunity to sell. In other words, they knew that the bears were in control, like we were saying, and they were going to sell their long-term bags in that period. Now, you guys know my strategy is not to do that. I don't buy into the market, sell into the market. I buy it and hold for the long run. So this is what those cohorts were doing. Now, interestingly, look at the difference here. The whales also took this opportunity to do some selling as well. Not as hard as the middle wallets here, but the whale wallets beyond 10K also took this relief rally up to 25,000 to sell. So again, they're distributing, they're selling, they're seeing this relief rally as exactly that, an opportunity to offload the bags to more excited people coming into the market who were sold this dream that Bitcoin was going to go to 48,000 in 2 weeks, as many moon boys and influencers were propagating, right? And that wasn't the case. Let's then keep moving and take a look at the supply and demand balance. Because what you then want to look at is, okay, we've got a bunch of people distributing, which is selling. Now, that's perfectly fine if they're distributing, but there's a whole bunch of new addresses coming in. Now, there was some new addresses coming in, but what we can see is there's not a whole bunch. So what I want to show you here, and this is a little bit complicated, but just bear with me for a second. The blue area here, this blue line you were seeing with the shaded area below it, is your 365-day moving average of new addresses. In other words, what's the yearly average of new addresses coming into crypto, into Bitcoin? And then your pink line, this more pink line here, is your 30-day moving average. So it's the monthly moving average. So the monthly versus the yearly. So what you'll notice is when you're heading into a bear market, the monthly crosses into the yearly, the pink crosses into the blue to show a bear market, right? Less addresses coming into the market. Then what you'll see, as you saw here just before Jan 19 here, is you saw the recovery. You saw the recovery where there was more short-term addresses coming in, okay? The 30-day moving average of new addresses was bigger than the yearly average. The pink line crossed above the blue line, signaling a big move ready for the upside. And then you saw that the pink line remained above the blue line. You then saw as we fell in early 2021, around springtime, we fell from 64,000 down to 29. And along with that, the number of addresses fell too. On the second rise up, for those of you who were in the market, we then ran from 29,000 back up to 69,000 by November of 2021. But here's the crux. The wallets didn't follow with it. The wallets did not cross above the yearly average. And this was because this relief rally up to 69 is where all the long-term holders sold out, knowing that we were going to have a significant winter thereafter. So they sold their bags here. And that's what we've seen, is that distribution and the whales haven't followed. Now, if you look just above my head there, what we want to look at is, are we seeing evidence of more demand coming in? Are we seeing evidence of new addresses piling into Bitcoin right now? And the answer is no. We're seeing low demand. We haven't crossed above the yearly average, which means this is low demand and not similar to what we saw here before our previous run out of our bottoms of the bear market. Okay, so that's one thing to watch for. We want to see new addresses come in, more optimistic new addresses coming into the market, showing more adoption. Another way of looking at demand is, let's look at the congestion of the network, right? Let's look at the miner revenue from fees, and let's look at the 30-day moving average of that. Now, you'll notice a significant area is between this 2.5% and the 5% miner revenue from fees. And what you'll notice is, previously on our recoveries, when we've recovered from the 2019 bottom, 2018, 2019 bear bottom, you will notice that we cross above our 2.5 and head towards our 5% miner revenue fees. Similarly, when we go to the downside to signal a bear market, you get low demand. You cross downwards through 5% and into this low territory here. That's what we've just had, right? We've had, if I just pop me out of the way, that's what we've just had here, where my cursor is, right? We had our period where we fell from 64,000 in Bitcoin down to 29 last year, and the miner revenues fell. On our second run up to 69, look how the miner revenues didn't budge. In hindsight, it's so super clear, right? But in the time, it was difficult. We were like, oh, Bitcoin's going to run. And you had, again, many influencers saying Bitcoin's going to 100,000. So a lot of FOMO kicked in. But the on-chain metrics wasn't showing with it. The congestion wasn't there in the market. It was just speculation, right? And again, we're still low. We've seen a little bit of a bump recently, which is a good sign. But again, we need to cross that 2.5% line and then work towards 5%. And that will be an indication that we are then getting ready to get out of this bottom, because the congestion's picking up on the network and therefore miner revenues are going up too. Okay, hope you guys are keeping up. Smash on the like button if you're appreciating this type of deep dive content. I know it doesn't appeal to everybody. I know it's far easier to watch a video of somebody in a fancy mall or in a fancy car showing you their trade, which is probably a demo account. But guys, we've got to look at the real stuff here. And if you appreciate it, let me know in the comments. Make sure you smash up a like. It really does support this type of content. Now, what we want to look at here is the exchange flows, okay? This gives you an idea of retail. Sorry, this is the total transfer volume. Sorry, this is to look at the number of retail investors coming into the market. And the way we do that is we start to look at the volumes coming in from people with 0 to 1K and 1K to 10K. They typically are the average investor, your bit of retail investors. And what you'll notice is a divergence, which is very important. You're seeing the price of Bitcoin relief rally, which is what we've just seen, but you've seen a divergence in the volumes. In other words, retail is not present. They're not accumulating on this dip, which is very, very interesting. We've not seen the same climb in revenue as we've seen in previous run-ups. So again, another clue that we're not quite ready from the on-chain metrics. Marry that up with our exchange flows, we're seeing that same divergence. This is your exchange flows, okay? So take a look at the exchange flows. Speculators are not coming into this market right now, okay? You can see the volumes falling on the exchange flows, yet you can see the price going up, which gives us evidence that this little upwards rally is unlikely to last, and more likely, we're here to spend more time sideways, if not downwards. That is the conclusion I'm getting from these on-chain metrics. So there you have it, guys. There is the on-chain metrics to back up why we got rejected so harshly from that 25,000 mark and why it was just that, a relief rally. But what is crazy was how the relief rally didn't even let you get up to 28, 29, 30,000. I was looking at it and saying, yep, this was a relief rally, right? We nailed that on. We knew it was a relief rally. We didn't get excited like the other people out there to say, oh, we're going to go back to all-time highs. That was very clear. But what I didn't realize, which is interesting looking from the data, is that the bears are in such strong control. That's the biggest thing I've taken over the last couple of weeks, is the bears are in really strong control right now. And when you marry that up with the on-chain metrics we've just looked at, retail didn't come in buying the dip, right? We saw retail continuing. We saw whales start to distribute. We're seeing all other wallets start to sell on this relief rally as well. And exchange flows are not following in the right sign either. So all evidence is pointing to more sideways if not longer, crypto winter behavior. And again, when you look at the fact that in previous markets, we've spent 140 days below our realized price, are we going to dip back below that realized price? Are we going to dip back below 21,300 and spend more meaningful time below there? Are we then going to wick down to our delta price or our delta price at about 13,200, right? These are things we've done in previous bear markets. Doesn't mean it's going to happen again, but history doesn't repeat, but it does tend to rhyme. So we can look at these things as clues of when we are about to get a recovery. Hope you guys enjoyed this insight. If you appreciate this type of content, make sure you smash on the like button. Don't forget to share it with somebody you know in crypto. Do check out the link to my free course, links in the description. Make sure you work through that TA course. And in the future, maybe we can do a fundamental course. Maybe we can do an on-chain metrics course like this as well, and we can make that free for you guys as well. Don't forget to smash the like button and subscribe. Go watch this video here, and I'll see you in the next one.